Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and I'm trying to help everyone out on the community. If you want financial education, looking at undervalued investment opportunities, click subscribe, join our community. I'm here to help you out. And another question is, how does this change if the Fed keeps rates low and keeps buying all the bonds? If rates are not allowed to rise and inflation keeps rising, how would you expect different sectors to react? So that is probably what's going to end up happening, is they're going to try to hold interest rates down. Now, I don't know if they're going to be successful at doing it. The bond market is massive. And if you get a big movement in people selling bonds and nobody wants bonds, then they're just going to create more money and have to buy more bonds with quantitative easing. So quantitative easing is creating money and buying bonds. It's not necessarily inflationary, but it does lower interest rates. Now, if we do have inflation and inflation goes up and they were to suppress the interest rates down, what happens is you get a greater real negative yield. What that means is that the inflation minus your interest rate is becoming larger and larger. And that's a recipe for people to sell more bonds. And the greater real negative rate is going to push gold, silver, and precious metals and all commodities through the roof. The roof. So if this is the roof, we go through the roof. And the roof is pretty high. That's what your commodity to S&P 500 ratio is. And basically, what I think is going to happen is you're going to see money chase price performance. It's exactly what we see. Retail investors, all they do is chase price. They have no constraint and no awareness of what value is. The majority of retail investors. So if something's going up, they're just going to run into it. So Bitcoin goes up, they're going to run to Bitcoin. If oil goes up in the future or uranium, they're all going to run into oil and uranium. So they're going to be running back and forth, chasing price all over the place. And almost everyone watches price. Value is looking at assets and pricing assets against each other and finding those undervalued opportunities. So under this scenario, if that plays out and where we have increasing inflation and they try to hold down interest rates with a real negative yield, I would be looking at, and I already am invested in massively because I think this is going to happen, in gold mining stocks, in physical precious metals, in silver mining stocks, and even more importantly, if you want a lower risk, more direct play where you take the inflation out of it, royalty companies are going to crush it. Royalty companies are my favorite play. I have a bunch of money in it, and I think they're going to do incredible over this next bull market. They do cost a little bit more. You're going to pay a little bit of a premium for it. But I think by far the premium paid today at a very small and low gold and silver price is going to pay massively in the future because remember, these guys they make money based off of volume and price. They have no costs. This is like cheating, guys. It is literally like cheating owning royalty companies. What I've been doing is I've been loading up on royalty companies nonstop. I do have some mining companies. They're not a ton. There are some larger mid-cap, large-cap silver producers, the bigger ones. And then I've got some developers who are developing mines potentially, and maybe one explorer. I don't have a lot of explorers. You don't need it. If in the royalty companies where I'm loading up, I like some of the small royalty companies, like an Ely Gold, ELYGF. I like Tutin Resources, TUETF. Those are both more gold-oriented companies. Wheaton Precious Metals is very good, WPM. I think Cisco Gold Royalty, OR, just broke out of its massive pattern. You're probably going to see that thing launch very high. So that's one that I'm also looking at is OR. Franco-Nevada is the leader. That's kind of the big boy. If you can get that at a good price, add a little bit in and just hold on. And then we have Nova Royalty. That is a copper nickel play. And again, some of these are really small. They don't have revenues yet, but I'm buying them. I'm holding them for this big, long move. And then there's Uranium Royalty Corporation, which also is a royalty corporation of uranium. So I'm buying these first movers. I am buying Uranium Royalty Corp. That could very well pull back more. I'm going to cost average in slowly. Another thing to keep in mind, I know I have a lot of new subscribers. Portfolio allocation is incredibly important. 1 to 5% is what I hold of each position if you're going to invest in individual companies. You can obviously do way more if you're in an ETF. You can do whatever you want there. You could do 50% in one because it's diversified. In royalty companies, you're playing this in a super low risk play. I mean, it's literally like cheating. They get 30, 40, 50, 60, 100 different royalties coming to them. They are diversified by nature. They don't worry about cost curves. All they care about is volume and price. And they make massive amounts of money. So if you have the price rocket higher, but you have oil prices move up faster, which means it's going to squeeze the mining companies' margins, the royalty companies don't care. They're like, we get more. And if they prove up more reserves on that land, the reserves are also shared and will be paid out to the royalty. So it's awesome. Royalties are awesome. And it is literally like cheating. So, look in those royalties. Another royalty is EMX royalty. That's a pretty good one. I own all of them. And I just keep piling in them over time. I buy mining companies. I buy a couple of explorers, not many explorers in my portfolio. And I own a lot of developers. So if that scenario plays out, you're going to win massively in gold and silver. Other commodities are going to do extremely well, just like they always have. And I still think that some of these commodities are going to outperform gold and silver in the main boom, so to speak. And then gold and silver will have one last run up after real estate kind of goes down. It'll run up, and we're going to swap. What I'm going to do is I'm going to swap my gold and some of my silver for more real estate at the bottom of this crash. But that's out 7-8 years from now or more. And at that time, I think we're going to see gold and silver be able to buy a lot of real estate. And I'm going to buy a really cool place and probably retire there. So that's my plan. In 7, 8, 9 years, I'll buy a very nice house. Probably a we'll call it a south-facing house, probably in Colorado, where the sun moves to the south in the winter. So I'll have an overhang too, where the sun heats the entire house during the day in the winter, and I probably won't even need really any sort of energy really, or natural gas usage, maybe a little bit at night, and that's it. And then when the sun moves in the summer, it moves north. So it'll be over the house, and the eave will block it and be protected from all the heat. So it'll be pretty cool. That's kind of what I'm saving for is my retirement house, and that house hopefully can be passed down to my family. And set up generational wealth for people behind me. Fingers crossed that this all works out as planned. If you guys like this content, please give me a thumbs up. I appreciate you guys listening. This is Finding Value.